What's up, everyone? It's Caddy with Money Investing. A very strong day for the markets, and that's pretty much what happens, right? When you are doing some form of QE, once again, you're injecting money into the economy from the Federal Reserve. We are seeing the S&P 500 up over 1.3% back over 4,000. The Nasdaq pushing up over 1.5%, almost at 12,000, and the Dow Jones rallying over 316 points, up almost 1% on the day, with the 10-year yields also pushing higher, almost getting back up to 3.6%. So as always, if you guys enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. There are very limited spots available if you want to access all the trade ideas, the recent trade ideas from FAS. I did pick up some FAS earlier, and on the day it was up a little bit over 7%, furthering into that profit zone, into that green profitable zone. Vertex continues to charge higher, getting up to our target of $323, and today it was up another 1.24%, so pushing higher further into that green zone. So again, if you want to access all these trade ideas, buy and sell alerts, options alerts, in fact, I sold some Tesla covered calls today, and of course get access to all the private videos and the lectures and tutorials and all the benefits included. Link's going to be down below. We have limited spots left for the Investor Early Bird, which will expire at the end of March. And then regular Investor Bird, there's only 3 spots left. There is a 16% annual discount that you can also take advantage of before the month ends. So after that, that annual discount will go away. So the Fed is likely to hike rates by a quarter point, but it must also reassure it can contain a banking crisis. So tomorrow is the day. I will be live to cover that. I will be live to cover the statement and the Fed speech as well. So make sure that you subscribe and hit that notification bell so you don't miss out on when we go live. But tomorrow is probably one of the most important days for the markets in terms of direction, in terms of policy guidance, in terms of, everything. It's just going to really put some certainty on the radar with respect to what the Federal Reserve plans are moving forward with respect to its monetary policy guidance. The central bank is contemplating using its interest rate tools, at the same time trying to soothe markets and stop further bank runs. And the fear is that rising rates could put further pressure on banking institutions and crimp lending further. And Michael Gappin, the U.S. economist at Bank of America, says, and I quote, "The broader macro data shows that some further tightening is warranted. You have to show you can walk and chew gum at the same time. Using your lender of last resort powers to quell any fears about deposit flights at medium-sized banks." So again, Jerome Powell is very much in a dilemma here, whether to raise rates, whether to not raise rates, because raising rates obviously could hurt the economy even more, cripple banks even more, and force them to fall over one another. And not raising rates is going to pretty much be a message to the market that they are very much done with increase in rates, and they are kind of switching over to a little bit of QE. We've already seen that play out and happen with the balance sheet, right? So balance sheet did swell up a little bit in the last week. $300 billion is not a small amount. And we're also seeing some new programs come online with BTFP program, the US dollar swap lines opening in for other central banks as well. All of that is some form of QE. It's not like a pure form of QE. The Federal Reserve is not actually buying securities, but they are still injecting money into the economy. And right now you'll notice that 86% of probability to see a hike of about 25 basis points. And the market right now is pricing in couple hikes all the way through May meeting. And for us to get up to 5.25%, and then consistent cuts all the way till July of next year, which again is going to be 6 cuts the market is anticipating. The market has been anticipating 6 to 7 cuts for quite some time. And again, we'll find out tomorrow whether this is going to be the rude awakening for the market. Like, hey, wake up. We're not getting cuts. Like, even if we're not getting these aggressive cuts, 6 cuts for the next 6 to 7 months or 12 months or whatever. Either that's going to be a big rude awakening for the market, or this is going to end up being a very precise prediction from the market, and the Federal Reserve actually starts cutting rates, and we start to see the markets rally higher, as we have seen over the last couple of days here. The markets have done really well on this anticipation that we are going to get some form of QE. I'll let you decide, but I've also mentioned in my previous video, in fact, yesterday's video, I mentioned that I'm so over this BS, because if you take a look at the Fed's balance sheet with respect to the S&P 500, that chart is almost identical, because every time the Fed prints money, every time there's quantitative easing, the market goes up, right? So it's just like the market has gotten addicted to quantitative easing, and without QE, it's now starting to become really, difficult or challenging for the markets to do well. It's crazy because we are setting ourselves for infinite QE if that's the thesis behind markets moving higher, right? Because like I said, one word, liquidity, right? Once liquidity once again starts to come back into the economy, the markets go up. And that's how it's supposed to be, right? You're seeing more supply of money. You're seeing more spending, more investment activity, more, income being generated. So there's a lot of things that happen when the Fed injects liquidity into the economy. And unfortunately, in my opinion, we're at a situation where the markets are very much addicted to QE. And without QE, we're just like, we can't even find some real growth in the economy for the markets to celebrate. Moving forward, some other headlines that I wanted to go over. So Fed needs to stop tightening interest rates, says former PIMCO's chief economist. And he says, and I quote, "Enough is enough. When you're looking at it from a risk management perspective, I can't come up with a table-pounding reason or a non-table-pounding reason for tightening tomorrow. I recognize the marketplace is discounting that, but I look at this at the end as the end of an incredible tightening cycle that is gripping the financial system and the economy as well." So one person suggesting the Federal Reserve absolutely needs to pause and enough is enough and no more rate hikes needed. Apple and Microsoft now account for 13% of the S&P 500. So that's a pretty sizable weight. In fact, it's the highest since at least 1990s. And you'll notice that they combined are now worth 13% of the index, and they have both outperformed this year. So Apple's up 22%, Microsoft's up 13% respectively. And tech's recent outperformance, and again, he says in parentheses, another analyst, defensive haven question mark, has resulted in the combined S&P 500 weight of Apple and Microsoft rising to a new 30-year high. And concentration risk of top 5 to 10 constituents was a hot topic during the post-COVID market surge, but it's seemingly transitioned to just the two heavyweights now. And obviously, as they have outperformed, the markets have really done well, and they can be considered as a bit of a defensive haven, safe haven from market participants at the moment. First Republic Bank reportedly in talks to downsize after if their capital raise fails. So First Republic Bank is considering scaling down its business if it fails to recover its large deposit outflows. So that's why we knew, like last week, 10 banks, including JP Morgan, put in about a $30 billion deposit infusion into First Republic last Thursday to make sure that it doesn't cripple and doesn't actually go under because of all the bank runs that we're seeing. But First Republic is just one of the many banks that actually has a lot of uninsured deposits and a lot of assets that are below their below their book value. In other words, market value is underwater. We've also got Bank of New York Mellon that's also in a very interesting position. And then we've also got some of the other banks, including Ally Bank, Co-America, some of them that are still, also struggling at the same time. So keep a close eye. We'll see what the Federal Reserve has to say tomorrow, but keep a close eye on which banks are not the best in terms of their capital ratios at the moment. Markets pushing higher. Tesla up almost 8%. So very, very strong day for Tesla here. Once for a change. Amazon here pushing up almost 3%. We got Google pushing up almost 4%. Meta was up 2.2%. We got Microsoft, Apple, Adobe. Financial stocks pushing higher. Energy is also green very much. Utilities was down, underperforming, with healthcare slightly lower. And semi stocks, Intel, AMD, Broadcom were pulling back, but Nvidia continues to charge higher. And in terms of other semiconductor supplied materials, was down almost 3%. But overall, a very, very, very green day for the markets and pushing higher. So utilities was the only underperformers. So again, kind of investors getting out of staples, getting out of defensives, getting out of recession-proof stocks and going into some of more tech and energy and financials. Once again, financials was the big leader here. That's, one of the reasons why FAS was up over 7%, TPST was up over double digits, and a lot of banks, regional banks, were pushing higher quite a bit on the day. So energy and financials leaders on the day, with utilities underperforming. Over the last 1 week, we have seen a lot of mixed markets here. Comm services and tech and cyclicals, healthcare pushing higher, with real estate, energy, materials down. And over the last 1 week, over the last 1 month, comm services and technologies are the only two leaders, with everything else just straight up selling off in the last 1 month. Volatility on a relative basis was higher, but it was down quite a bit, 11%, and natural gas here is selling off, with Bitcoin back over 28,000, Ethereum almost trading as much as 1,800. We did see Marathon, we did see Riot, a lot of those blockchain stocks push higher quite a bit. So this was the breadth on the market, with over 19 stocks in the Dow advancing, and about 386 in the S&P 500 pushing higher with 99 declining. And NASDAQ, we had about 2,500 stocks pushing higher with only 830 stocks selling off. So going back over to the market, volatility absolutely getting crushed down over 11.5%, coming down back to 21 levels. Crude oil prices are once again pushing higher, so we are seeing a little bit of momentum for crude oil back up to almost $70, which is actually going to be now a resistance to watch for crude. So this right here, you'll notice that we're starting to see a bit of a rejection there and started to pull back down. So $65 per barrel is going to be that support for crude oil to watch. And Bitcoin getting another rejection here. 28,000 is going to be that level. This right here is going to be very, very important level to watch for Bitcoin. And for Ethereum, it's 1,800. Actually, 1,738 is going to be that support level to watch at the moment. Right now, we're just consolidating sideways, and there is possibility that we get back up to 2,030 levels for Ethereum moving forward. So when we talk about the S&P 500, we are seeing some momentum back up, and as I've mentioned in my previous videos, I think 4,100 is a possibility. 4,100, I wouldn't be surprised if that level gets hit for the market. We're not that far off from 4,100. That's only going to be 2, maybe 2.4% upside for S&P 500 moving forward. And again, depending on what Jerome Powell has to say tomorrow, it's possible that we get up to 4,100 for the S&P 500. And the NASDAQ index also with a very strong move to the upside, up almost at 12,000 here. And the next resistance and the target that we have talked about is going to be 12,280. That's going to be that next level. That's the target that we have been talking about on the channel before. And we're getting a very nice validation, very nice bounce off of that previous high, the lower highs that NASDAQ was getting rejected at. So very strong move. And again, you know, it's quite crazy because we are kicking the can down the road, right? I asked everybody in the live chat, you know, what do you think the Fed should do tomorrow? And most of the people said they should hike rates or they should pause. One of those two things, right? Not a lot of people mentioned cutting rates. And I think only 9% mentioned cutting rates. But if the Federal Reserve, you know, and starts to really flip on that policy and we start to see a lot of rate cuts and the balance sheet getting swelled up again, we're back to those quantitative easing days where the Federal Reserve used to print money and buy securities. Instead, only this time, they're not buying securities, they're lending money out in exchange for securities. So they are, you know, not investing, they're lending, and at the same time, they're also cutting rates. So, you know, markets tend to do really well in that environment, right? That's bottom line. That's why, you know, it's so difficult to really understand what's going to happen with the macros because there's so many moving parts, there's so many moving pieces. However, I do believe that we are simply kicking the can down the road. We are putting a band-aid on the wound, right? Think of us, you know, think of the economy having a wound, have a really severe wound from, you know, COVID and everything. And that wound got worse when the Federal Reserve was doing QE for too long back in 2021. And then we wanted to let that wound heal and let it get better with the actual remedy, with the actual healing process through raising rates, through quantitative tightening. And as soon as things start to get bad, we just put a band-aid on top of it without allowing for the wound to get better. I don't know if that's a good analogy. I'm just going to still use it. But the bottom line is we are simply just putting the band-aid on the wound and not letting it heal. In other words, we're kicking the can down the road. And it's good. I mean, I'm not complaining. Like, this is a very good rally. I mean, I'm on FAS. It's up 7%. I own, of course, Tesla. That's up 7%. I own a lot of tech stocks that are up like 3, 2, 4, 5, 7%. So it's a great day. I'm not complaining. But as I've always mentioned, as prices go up, risk goes up with it, right? And we have to really understand the psyche behind why prices are moving up in the first place, right? Is it because of actual growth in earnings? Is it because the companies are reporting some strong numbers? Or is it mostly sentimental, mostly, you know, macro-driven, you know, something about liquidity, something about money supply, and something about QE, right? I think it's the latter in this case, right? We're seeing a lot of momentum because the market is anticipating a lot of quantitative easing once again, rate cuts, and the Federal Reserve to once again inject money into the economy. So those are not the reasons those are not the reasons that I want to necessarily participate in those rally. Of course, I'm still invested long term. Of course, it was still a great day, and I'm not complaining. But I just really want to caution everyone from what could happen in the future if we start to set ourselves up for these types of expectations, and the Federal Reserve comes in and goes the other way. So anyway, 12,280 is still going to be that level of resistance. And let me know in the comment section down below if you actually believe we are kicking the can down the road, or if this is going to actually lead to a very strong rally back up to all-time highs. Let me know down in the comment section below. But next resistance, 12,280 for the Nasdaq, and S&P, we're watching 4,100 going into tomorrow. Talking about Apple here, Apple continues to break to the upside and now starting to break above 157 as well. And the market cap for Apple is now sitting at $2.5 trillion once again. We're not that far off from all-time highs. Apple is only 14% away from its all-time highs. Absolutely nuts. And we talked about this inverse head and shoulders, right? So this was a left shoulder, head, and a right shoulder. You can also see it on the 30-minute chart a little bit better. And you can see that we are now starting to see a consistent breakout to the upside for Apple past 157, 158. So that's a pretty good momentum to the upside. We're also starting to break from this downtrend. This has been the lower high and lower low. In fact, I did a video over the weekend talking about it. And if Apple starts to break to the upside from this downtrending channel, there is a possibility the market continues to rally further. And 177 is going to be that next resistance to watch for Apple. Talking about Amazon, Amazon was also green very much. It was up a little bit over 2.9, almost 3%, getting back up to $100. And this right here is going to be that next resistance level to watch. That's the lower high that we are paying attention to for Amazon. And again, still in the context of a downtrend, still making lower highs and lower lows. But that is going to be that most important resistance level to watch for Amazon moving forward. Talking about the big winner on the day, Tesla here up over 7.8%, getting back up to 197 on the day here. And this right here is going to be that resistance at 200 to as far as $220, $228. Those are going to be some levels to watch. And the reason being very simple. We have gotten rejected at those levels in the past for Tesla. So very, very important levels. Maybe I will do a video on Tesla in the future. But first things first, going over the technicals and, of course, the big Fed meeting coming up tomorrow. Next up, we've got NVIDIA. NVIDIA continues to charge higher, up another 1%. And again, my target's up to 292 with this sentiment, with a lot of the psychology that's driving this move higher. I wouldn't be surprised if we do get a move back up to $292. This is going to be that next most important level to watch for NVIDIA. Talking about advanced micro devices, and AMD here pulling back a little bit, down about 90 basis points, still getting a bit of a rejection at this higher high. So this right here is the higher high inside this uptrend. The RSI, of course, at over 70, MACD also pushing higher. So we are overbought for AMD, so it's only logical for it to pull back and see a bit of a, RSI cool off a little bit, see a bit of a breathing room for AMD to come down. But of course, it's also understandable if the psychology, if the sentiment really takes it, momentum takes it to new heights past $100 per share. But those are going to be some levels to watch. Talking about PayPal. PayPal also had a very strong day, up a little bit over 4.7, almost 5%. We are getting back up to this lower high. So that's going to be a very important resistance. We'll see if we actually do break out this time. And then the next target's going to be all the way up to $87, $88. So those right there are going to be some levels to watch for PayPal moving forward. So very strong company in my opinion. Fair value is around $70. And again, those are going to be some resistance to pay attention to. Talking about Square, and Square also pushing up almost 4%, still in the context of this very small downtrend. So as you can see that we are still making lower highs and lower lows over here. And if we do get a breakout, we've got a resistance in front of us at sitting roughly $83 to $89 per share for Square moving forward. Those are going to be some levels. And of course, if we get a breakout, then there is a possibility that Square also breaks to the upside with some higher highs and higher lows. Earlier, you'll notice that we were making these falling wedges. We got a couple breakouts and we started going sideways on a broader scale. And right now, we're just kind of on a smaller pattern. We're just making lower highs and lower lows. So next resistance really at $83 to $89 per share. Talking about Meta platforms, and Meta on the day was up another 2.2%, back over $200. So seeing a lot of support getting validated at $197, $198. So this right here, a very strong area of support for Meta. And the next resistance is going to be $222. So this right here is going to be that next level to watch as a resistance for Meta platforms. And of course, support level is going to stay put at $198, close to $200 per share. Talking about Netflix, and Netflix on the day also pushing higher a little bit. Still pretty oversold, I would say. RSI MACD is still on the oversold side. And the support level is going to stay put at $276 to as low as $275. And resistance going to be all the way up to $380. That's going to be in line with this red rectangle that we've got for Netflix moving forward. Those are going to be some levels to watch. Right now, still pretty oversold at the moment. Talking about Google, And Google here was also green very much on the day, pushing up over to 3.8 and breaking out of $105. And we are finally starting to see a break to the upside from this downtrending channel for Google. So over my weekend video, for I don't know how many people watched it, but I talked about how there's some stocks still in an uptrend, some stocks that are still in a downtrend. We could turn into a very strong uptrending market if the ones in the downtrend actually flip over to an uptrend. Apple and Google are in fact switching that trend over right now as we speak. On today, Apple broke out of its downtrend. Google also broke out of its downtrend. So those are stocks that are switching over to an uptrend. AMD is struggling a little bit at its higher high. Nvidia continues to push higher. Tesla did really well on the day. Amazon is getting up to its lower high. We'll see if it actually breaks out even further. And Microsoft was already in an uptrend. It's also struggling a little bit. It's not finding a lot of momentum, but it's still green very much. And of course, the RSI and the MACD was overbought. So you can kind of make sense, right? AMD, Microsoft getting up to their higher high. They're overbought. They're not going up as much. But we do have, Google and Amazon and Apple and Tesla that were in a downtrend that are actually moving and catching up to some of these stocks here moving forward. So that's really what the analysis is right now. And talking next about, Shopify, last but not least. You got Shopify here pushing up over 4.2%, so very nice move to the upside. This is going to be those higher lows to watch for Shopify. Support level is going to stay put at $41, $42 per share. And we've got a gap to fill on the upside over here, and the next resistance all the way up to $54, $55 per share for Shopify. So hope you guys enjoyed this video and a complete update. Big Fed meeting coming up tomorrow. I will be live to cover it. Make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Consider supporting. We'd love to have you on board. We've got a little bit over 3,700 members talking about fundamental and technical analysis and macroeconomics and stocks and options. So there's a lot of research, a lot of benefits included with limited spots available and the 16% annual discount that does expire at the end of March. As always, happy investing, and I'll see you all in the next video.